It's Brian here at Expert Dojo. Every week I come back, and every week all I talk about is how to help you build up a company. And I would say, look, I use the term billion-dollar company, but truly, if you can build up a company that's worth 50 million, 100 million, you are part of the teeny group of people that have actually done something like this. I at the beginning, I like to go through the structure a little bit, and then we're going to bring some folks in, and people will talk about areas that are important to them. It might be the deck, it might be something else. But remember, always think of it like this: when you're building out a company that you want to get investment for. And so when I think of like a venture backable company, the only thing I'm thinking of is that you need investors for most of the time. There's a few venture backed companies that don't need investors, but the vast majority of them need investors. Now, when you need investors, you need to be able to show the investors that you have the ability to be able to get them their money back. And I think this is the one really big area that startups struggle massively in, because what happens is, whether you're a startup for a SaaS company, a marketplace, heck, as a venture capitalist, we're a startup, right? I mean, we're all startups in our own way. But what we do is we start from a very creative place. And that creative place means that when we're doing decks or when we're doing presentations, the presentations are very much focused on how do we show this incredible creative innovation that we're bringing to the world, right? And so it kind of sucks, because that's not what investors are looking for. What investors are looking for is, how are you going to return my money? That's all. That's all they care about. And so I want to start up with this foundation, so that when everybody gets out of this week, the the language that you're speaking in is not the language that you have. The language you're speaking in is the language of investors. And I see Jack and James have joined. Wonderful. Jack, I'm going to bring you up in a couple of seconds, buddy, because we're going to go through your decks and we're going to have a look at them. Because I want this session to be about helping you. This is like Duolingo for investors, right? You start with what language you speak, and then you're going to, the Costa del Sol in Spain, and you know that you need to speak a little bit of Spanish. You know, some of your language is important, but actually much more of the language of what the investors are going to want to hear is important. So, what are the ground rules to this? Ground rules are that you have to be able to show them what that return is going to look like compared to other returns. What do I mean by that? Okay, two real types of investors, actually three types of investors. Investors who can't afford to lose the money, they're the worst, right? Because they will bother you every 30 seconds for your whole life. As an early stage startup, if you can avoid those investors, please avoid them. No matter how much you need the money, I promise you, it won't be as bad as the hell they put you in the future. Number two are the types of investors who have plenty of money. Those investors are almost as bad, because they have lots of opportunities. Everybody's pulling at their money. They're the ones that have got like a couple of $1 million here, a couple of $1 million there. They got money in the bank. They got money in gold. They got money in cybersecurity companies. They got money in late stage companies. They got money in Reddit when it just went IPO. They have money in things that they expect to return. And every single morning of every single day, the only thing they're looking at is their IRR. And that IRR is an internal rate of return, and it just compares everything. Gold was worth what last week? Gold is worth what this week? I get 5% per annum money on in my bank, which is what pretty much anybody can get these days. You don't even have to be rich to get that money. But I'm guessing, like, as people get wealthier, it jumps up to like 5.5%, 6%, maybe even a tad over 6% for some folks. And then you're moving to like kind of risky, but more semi-risky ones. So if you're looking to invest in real estate, like I know folks that are giving 10, 12, 13% semi-guaranteed money on real estate. So as an early stage startup, you are competing with that. And remember, early stage startup is not only not a guarantee, it's not even a great option for a lot of these investors. 50% of funds will not bring back a return on the money that gets invested. They be like, hey, caveat emptor, bad luck. You guys lost. Sorry to hear that. But don't worry. Next fund is going to be great because we're going to really find you the Airbnb. But also bear in mind that for any fund to return, it's normally 5 to 7 years. For any angel investment to return in the earlier stage, it's 5 to 7 years, but it could be 10. And that means that even if you give them that semi-risky real estate comparison, which is 12 to 15% a year, if it's 10 years, you have to give them 150% of their money, which means it has to grow. Okay, anyway, I don't want to bore you with this, but I just really want you to get it. And Jack has very kindly agreed to come up, and we're going to go through Jack's decks. And Jack, maybe have your deck ready there so we can pull him up, because I really want to talk about it, because there's two things about Jack's deck which I think will be just hugely valuable for everyone. The first is very similar to most founders. It's going to go through problem, it's going to go through solution, it's going to go through some market size, we're going to go through some details. I am not going to be judging the deck based on aesthetics. I'm not judging the deck based on it being a good business or a bad business. I'm only looking at it first from the perspective of an investor and saying, as an investor, is this deck giving me what I need? And I promise you, everybody, it's going to be the same. So, bringing you in, Jack. How are you, buddy?
Great, thank you. Good morning.
It's good to see you.
Yeah, you too. I'm excited about your new series.
I think this is like, the funny thing is when you invest in 280 companies or so, and we're going to be investing in lots more, you kind of see everything. I think it's, it's like having a big Irish family. You got enough uncles, nephews, nieces, kids, moms and dads. Everything's in multiples.
Yep.
There's not a lot you don't see by the
I'm
time you
Irish
make it through the
myself.
family. Like by the time you make it to the end, it's like, okay, fair enough. There's literally nothing I haven't seen. So as all of our companies have come through, I've seen the companies that look like they're the rock stars, the people who are incredible at pitching. And I've seen that they don't always end up where you imagine they would. I've seen the people who are like super humble and you would think that they can't sell anything. And I've seen their companies soar and do really well. I've seen customers act so illogically that you sometimes wonder how you can possibly push a business out. And much more importantly, after investing, at least for this context, after investing in all these companies, we've co-invested with over 700 investors, maybe 800 investors at this stage. We haven't even counted them in a year. So I see everything. I see the good investors. I see the investors which are not so great investors, which honestly is most investors in the early stage, because most investors don't know what the heck they're doing. We're doing in the early stage. And so based on all of that, what I want to try and do in this series, is to try and give as much feedback as I can to folks that are not necessarily inside our investment criteria. Maybe we weren't inside their investment criteria. Maybe they're just not part of the cohort. But I want to be able to share some of this painful knowledge that I've accumulated wider. So it'd be good. So Jack, tell us a little bit about what you're doing and what you're raising, very specifically from an investor perspective. Like what have you got? Maybe we talk a little bit about why real estate is important, and then talk about like what you need to raise from an investor and what that looks like. And then let's go through the process on your deck, and we're going to see like what parts of the deck are actually speaking to that.
Awesome. So well, real quick then, an elevator pitch kind of thing. We are creating a secondary marketplace for hard money lending notes. That is, we're basically crowdfunding hard money notes in a way that it makes a safe investment. So on one side of it, a hard money lender can liquidate senior positions of a single note. So instead of selling a whole note, like every once in a while, hard money lenders, which by the way, backing up a little bit, hard money lenders lend money on real estate for short-term bridge loans. Typically, it's for a fix and flip or whatever. And the person buying, the investor, they have to be accredited investors. They use their money for very quick. They can get a loan in maybe a week, where otherwise a conventional mortgage would take 30 to 45 days. So if they need to move fast on a property, then they can use hard money. It's called hard money because it's based on hard assets. So now, as a hard money lender, some of them are not super liquid, where they don't have like $100 million. They can loan out money, but then when they loan money out, they're just earning 12% on it, typically 12%, 11, 12%. They like the points up front because they get sometimes 3 and 4 points up front and then the 12%. So they like to keep doing more loans because that upfront points is a greater yield than the 12% per annum.
Yeah.
So they like to be liquid. We are providing a way for them to be liquid.
Okay.
Um,
Okay.
mhm.
So I want to pause there for a second. This is really good because what I kind of use as the measurement of excitement. Excitement with investors is no different than a relationship, really. It's exactly the same, right? Within a period of time, the other person has to realize that there's something really big, right? There's an epic insight. This person is the one of all of the other people out there. There's something that just emotionally caught them and got them in place. Now, the longer it takes, and you have a slightly larger challenge because what you're explaining, you know that 80% of the people won't understand it straight away. Even the terms hard money lending, people in real estate will get it straight away, but anybody outside real estate won't necessarily get it. But even if they do get it, it's still a feature, right? So we want to get to a place when we're going through that elevator lift, the elevator lift pitch, that we can show people within a tiny period of time why this is huge. So let me just try and re-engineer this a little bit. How much money is lent on hard money notes every year in the United States, more or less?
I don't have that exact figure, but there's 8,300 hard money lenders, and they range between each of them. On the low side, they might loan out 5 million a year. On the high side, they may loan out 5 million a month.
Okay, great. So let's average in the middle at like 25 million a year, right? Let's say that like 25 million a year is being lent out per, and how many are there again?
8,300.
83. Can you just work? Can somebody work that out? 8,300. We are talking trillions of dollars, right?
If
And
I guess
and the
I think
rest.
the number is not that big, Brian. I think the number is hold on, I've got it in my deck actually.
And then let me take it to the next level, right? So a hard money note generally is around the 12% mark, you say.
Yes,
Okay. What is the average loss within hard money notes?
the average loss.
Yeah, so for example, what percentage don't pay back?
Oh, okay. So yeah, if they're doing uh, I would say 1 out of 25
Okay, amazing,
default.
right? So what we're pretty much saying is, look, there's a way to be able to get a return on your money that's literally twice to three times what it looks like, what you can get in your local bank. And the risk of losing money on it based on previous transactions is less than 5%. Fair?
Even better than that, I mean, that's a fair assumption if we were doing a typical model, but the way that we're doing it, it makes it way
I,
more
I
safe.
understand. I understand. You need to create a baseline though that a 5-year-old
Yeah,
Labrador can understand. Okay.
yeah.
And your baseline is this. Look, you're real happy this year because you could get 5 or 6% on your bank account. But what if I told you that there is hundreds and hundreds of billions of dollars being lent out every single year with less than a 5% of that not being paid back at between 2 and 3 times what you get in the bank rate? What if I could tell you that? And what if I could tell you that actually we've created a model that allows the people who rent, who actually making the 12 or 13% to actually be able to get more money being lent out than they actually have because we've actually crowdfunded. Literally, we've come up with an epic insight that has taken one of the safest ways to be able to get a double digit return on an annual basis and be able to make it even safer,
Okay.
right? That's
Yes.
it. You just have
Mhm.
to, whether it's how I explained it or something else, the what I'm moving you from and to is I'm moving you from spending 3 to 5 minutes talking about features, and I'm
Yeah.
moving you to hitting people with an epic insight and a market size within the first 30 seconds.
Yeah.
How would you like, you understand, within real estate, which everybody knows is one of the safest ways to be able to invest in money, there's a way to be able to get pretty much double-digit returns every single year. And we're taking that model and we're making sure the model is better. Now, tell me the epic insight. What is the epic insight in the least product attribute way? Oh, there we go. Jack got upset, but Jack got upset. Jack got kicked off. But like, so you see how it works. This is about the language of changing it from. I'll bring you back in, Jack. This is the language of changing it from our language, which is, hey, I have a 15 slide deck where I'm going to bring you through a journey of telling you how smart and clever I am, that I managed to find all of these things within this product that I'm going to show you, which I'm going to do very well, and translate it into, you as an investor are looking for a better return on your investment. I'm going to show you by slide 2 or slide 3 what that better return looks like. And I'll say one other thing, and then I want to get to the epic insight with you, Jack. And then let's bring up the deck if we can, just share it there, however we do in the screen. And then we're going to go through the deck and see where it compares. Now, before I ask you to go through the epic insight, we recently did a demo day for our companies. And on our demo day, we asked them to put 5 slides only. Only 5. Slide 1 is, you can tell us your name if you want to. No problem. Thank you. It'll help people have a little bit of context. Slide 2, you talked, these are for companies that were already at traction. They already had business coming in. Slide 2, tell us what percentage of 200% growth that you did last year and the year before, and what percentage of 200% growth that you're going to do next year, and tell us why and how. You're just going to put the numbers up. No big charts, no like thousands of graphs. I just want to know, what was your percentage growth last year and the year before, if the year before was relevant, and what's your percentage growth in the coming year based on basic probability, okay? And you're not even going to talk about that because it's obvious. You're going to have the number here, the number here, and the number here. You're going to talk about the hypothesis, the underbelly that sits around that, because that's all the investor wants to know about. They don't care. Nobody cares. Look, I will say as a fun, why do I do this? Why do I sit here on a Monday morning and like chat through this stuff? Because I genuinely want the whole world to take over entrepreneurship. I would love the entire world to be decentralized. I would love there to be no governments. I like police. I'd like there to be police, and I'd like there to be protection and good people and nurses and doctors and all the wonderful things the governments provides. But outside that, I want everybody to be an entrepreneur. And if we're going to be an entrepreneur, I want us all to be successful in an entrepreneur. But if I go to investors and say that, they don't care. What's the only thing they care about Expert Dojo is, what's my IRR? That's all. They only care about our IRR. If our IRR is high, they will invest money as an LP. If our IRR is low, so I could spend 15, 20 minutes talking about how, nation states on purpose keep people poor so that they can continue to work and keep the system going. I can talk about how, the poor will always stay poor and the rich will always get richer. I can talk about the fact that school doesn't help people. Like, I can talk about all of that stuff, but like, who cares about that? The epic insight that they want to hear from me is based on my investment thesis. What is it that I do to get better entrepreneurs that have a higher probability of reaching a higher valuation that they can exit at, that my investor can get a return? That's all they care about, right? So our slide 2 that we told our founders to do is percentage growth previous year, percentage growth last year maybe, and then your percentage growth going forward. Slide 3, epic insight on market size. We haven't even got to your product yet, but your product will kind of be discussed in your epic insight and market size, but it will not be discussed in the context of features and benefits. It would be discussed in the context of how big the market is. So why is that important? What's that, Jack?
So I will have been talking now for 2 or 3 minutes, and they don't know exactly what we're doing yet.
They don't care.
Okay.
They don't care. They just care about the valuation increase of your company. Really, I mean, I'm getting to the culmination of slide 5, but the culmination of slide 5 is the hypothesis that gets you to a Series A. They actually don't even care about you exiting. They don't even really care about you being acquired, about anything, because they know that's too far away. They know too many things are going to change between now and then for you to get there. What they really care about is your valley of death, which is getting to 200 to 300 to $400,000 a month in revenue. How are you going to get through there? How are you going to get through from either zero to $300,000 a month or 20K to $300,000 a month? Like, how are you going to survive to there? The moment that you get to that point, nobody mind. Everybody's like, great, happy. Look, you get like, we have one of our companies who I'd love to talk about it because he's such a great entrepreneur, but I can't yet because his term sheet's just come out. He just got a term sheet for like $6 million of a $10 million raise, valuation of like 30 plus, really great founder, really busted his way through. How do I feel as an earlier investor in that company? I'm great. Like, I don't really care what happens next because I know the person who put $6 million in at a valuation of 30 cares a lot more. Right? So why do I care? I don't care. It's not that I'm not going to help. It's not that I won't be happy when it goes really well. I will be happy, but it's a little bit like when my kids were 12 or 13 or 14. They're my responsibility, right? I have to educate them and get them ready. But when they're 18 and 19, as much as I would like to think that I am going to guide and help and direct their life, they could give two hoots about me. They moved on. You know, their girlfriend, boyfriend, best friend, they just took on that mantle of the person who's going to influence their life. In this case, the person who's going to take on the mantle of who's going to influence you through a Series A to a Series B to a Series C is going to be the later stage investors. Mm-hmm. Because they know that game better, and also because they have more skin in the game. If they lose $6 million, that's going to hurt them a heck of a lot more than it's going to hurt us or anybody else. This is a really good thing. That means the only thing, remember this, your first deck, the only thing you're looking for is a first date. That's all you're looking for. You are not looking to convince anybody to get married. You are not looking for anybody to give you a job. You are just looking for them to give you longer than 35 seconds. That's all, right? So slide 1. And by the way, look, I'm not doing here, because this is super extreme what I'm giving out, right? So I'm not giving a direct formula for what your deck should look like. I'm giving a direct formula as to how investors think. Right? And then you just adapt your deck. So it's like slide 1, hi, it's me, it's Brian, company name, picture of the company. It will give an indication that you're in the real estate space, right? Slide 2, this is what I grew last year, as long as you were actually in business. And this is what I'm going to grow next year. And this is my hypothesis around it. Slide 2 is just really about probability. The probability to being able to build to where you're going to build to. Slide 3 is then going to market size, your epic insight to market size. So look, here's what happens. Every single year, there is over $500 million of hard money notes which are lended out on real estate. This provides us with one of the greatest opportunity for all investors to come in on the back of this that there's ever been. It's just real simple. On the principle that nothing is guaranteed, would you rather get 12% than get 5%? Like, that's all. And if you would, I'm going to take you into this world and show you how. But there's nothing else out there that can do it. Next slide is for me as the team. Because now I'm like, okay, do these people really have the chutzpah to be able to do this? Right? Can they make it through? Have they done it before? Because lots of people will come out and say, I'm going to do this, I'm going to build a unicorn. But the thing with investors, especially after you've been an investor for a long time, is you find that like a lot of people believe they can do a lot of things. It's like my little kid, like forever. He wanted to be the greatest tennis player in the world. God dang it, as his dad, I wanted him to be the greatest tennis player in the world. But there was a little weensy part of me that kind of always knew that it wasn't going to be the greatest tennis player in the world. And that's okay, right? But it means you have to adapt your strategy to other things. And so with an investor, what an investor is looking at is probability to success, probability to losing money. Like, can you imagine? Like, let's say you had $5 million in the bank. Let's say you'd worked for like 40 years to get $5 million in the bank. You're doing like really well. $5 million is great. You got your house paid off. You got $5 million in the bank. And then an entrepreneur comes to you. They give you like this great epic insight about a market that's going to grow and it's going to get really big. And then they say they've never done it before, never, ever, ever raised money before, never, ever, ever built out a company before, and they haven't started, but they're like, hey, trust me, trust me, trust me, I can do it. And boy, do these people talk really well. And you put $50,000 in, and a year later, they say to you, the money's lost. Like, lost, it will never come back again. You can make it up with another investment, but this investment will never come back. And yeah, it's 1% of your money, but it hurts like a bugger. And so you don't want to lose money as an investor. And honestly, as a fund or even as a founder, like, you don't want to use their money. I find this deck, when you move to this place, is as good for you as it is for them. So your people slide is speaking to the likelihood. If your previous slide is speaking to the probability of your thesis being correct and getting to a certain amount of revenue per month, your people slide is speaking to the likelihood of those people being able to do it. Right? And then for me, like, next slide is your paths to Series A. Okay. And if you're wondering, like, where does the problem and the solution and everything fits in here, you will bleed it into those 5 or 6 slides.
Mm.
Okay. And the reason for me why it's so important to have a short deck at the beginning is because I've seen, it's like, what's the great Oscar Wilde quote where it's like, I didn't have time to write you a
Yeah,
short
yeah, yeah.
letter, so I wrote a long one instead. Like,
I think
that's
Lincoln. I think
one of
Abe
my
Lincoln
favorite.
did that.
Well, who was it?
Abe Lincoln.
Oh, is it Abe Lincoln who said it?
Yeah, on
Oh, I'm
his
sorry.
Gettysburg Address, he said he wishes he was he wasn't smart enough to write a law or something like that. He was humble about it, but
Yeah. Oh, I'm sorry, Abe. But look, if Abe had to be confused, Oscar Wilde was a truly brilliant person. But my other favorite Oscar Wilde quote is, we're all in the gutter, but some of us are looking at the stars. And I like that because it's our nice
in
it's
the
our
so the
nice
fifth.
entry. Yeah, go on, Jack.
I'm sorry. So the fifth slide is what are we doing on the fifth slide? We got team on the fourth.
The fifth slide is your paths to Series A. And so and so and I'll talk about that fifth slide in a second, but as a founder, you can do 5 slides, you can do 10 slides, you can do 12 slides. Don't do more than 12 for a first date. Don't do more than 12, right? Because but like, I'm not saying you have to do 5, but I really am saying 98% of all decks I see don't speak my language as an investor. They speak the entrepreneur's language.
Mm,
And that's a problem because you want to make sure that I see an epic insight. I see a team that are likely to be able to achieve that epic insight. I see a market size that can get you to $1 million a month in revenue plus. If you can't get to $1 million in revenue plus, you're not a venture backable company. If I was sitting beside somebody from Sequoia right now or from Andreessen, they would say, like, what are you talking about, Brian? If you can't get to $5 million a month, you're not a venture backable company. But I think if you get to $1 million a month, you can get acquired. You can get acquired for like 50 million or something, as long as you can show that by adding on extra companies, you can do okay. Like, you can do okay on it, right? So, but if you can't show that you can get to $1 million a month in revenue, then nothing else really matters. And
mm,
what you want to really avoid is this whole, like, thing at the end where it's just a big old hockey stick that's going up that shows you're going to hit $50 million a month in revenue. I got a really good friend investor, Jeffrey Delasio, and Jeffrey's will say he's invested over 150 companies, which meant that 150 people have lied to him. That's what he says. Every
mm,
single person he's ever invested in has lied to him about their projections. Now, they wouldn't see it as lying. Some would see it as being optimistic. Some would see it as being sure, which is probably still being optimistic. Some would see it as, but every single person failed. Every single person. And so
mm,
again, I'm not saying be conservative. I'm not saying be optimistic. I'm saying you're telling a real story to people who matter to you in your future life, because this is going to be the deck. Okay, look, why don't let's bring up yours. I know
yeah.
yours, by the way. is it goes through the more traditional format. But I want to
Yep.
just talk through it to see, because none of this is black and white, right? This is all about shades of gray and what suits you. I just want to make sure that when you're interacting with investors, and by the way, investors are not just show on stream. Let's get you up here. Okay, nice one, Jack. Can everybody see that? Let me just make sure. James, give me the thumbs up. Can you see that? Okay, awesome. So, and I'll just bring Ash up here as well to see if he's got. Okay, nice. Okay, very, very easy. So, slide one, in my mind, this is okay. Like trusted ETF, exchange traded fund platforms are a step in the technological revolution of the financial market. Step two is the tokenization of every financial asset. Larry Fink, BlackRock. I think it's a super interesting one because it's very topical right now. Like you have my interest, okay?
Okay.
Because obviously what's happening within BlackRock. And I think most 12-year-olds know what's happened with BlackRock and Bitcoin right now, never mind most adults. So this is good. This is very good. The entire market could be tokenized. Wow. Okay, show me your next slide. Because now what's happening is each slide, Jack, the bar is increasing.
Yep.
Okay, so we're coming in with the traditional deck format, which is problem solution, right? No transparent market for hard money notes because no transparent performance capabilities, no alignments between lender. Okay, so here's what we do. You're going to talk through this, okay? Present it like you're presenting it to an investor. Don't change anything. Don't worry about, like, this is about you building the greatest, most brilliant deck. So let's go through the deck as it stands right now, and then we're going to start seeing what things can we change on this deck to make it better.
So the problem is this: there's no transparent marketplace for hard money notes because there's transparency performance capabilities that there's not present, that they don't have that because it's just not capable. You can't provide the transparency, and there's no alignment between the lender and the buyers of the note because the lender is as dealing with the borrower, and then the buyer of a note is on the other side of that, where there's no connection between that in a marketplace because they just handed off the note and they're done with it. And then trading notes has been borrower dependent and illiquid. In other words, whenever whenever you want to buy a note, you can't. It's dependent on that borrower for you to transfer that note to another person.
Okay. I will tell you, most people at this stage you've lost.
I've lost them. Yeah.
Because this is hard stuff.
Yeah.
Firstly, you're giving me three things, right? Three things is real hard for me to remember. Like if you say to me, Brian, you need to make sure that you have a little tag that you sneak into your boy's bag when he's like 13 or 14, because if somebody kidnaps him or takes him, you'll never forgive yourself.
Mm-hmm.
That's all you got to tell me. It's got to be huge though, Jack. It's got to be huge and it's got to punch me in the face. Like all of these are product attributes. None of these speak to the fact that my boy could be kidnapped.
Mm-hmm.
You got to give me something that big.
Okay. All right.
The other rule is you can't have more than 30% of your deck in writing. You just can't have it, because what happens is the stuff you write competes with what you're saying. You also can't really repeat what you see on the deck because it seems like it's being used as a crutch. It seems like you don't believe it.
Yeah.
They have to see it.
Let me ask you this, Brian. So do you think there should be two different decks? Because you've got the leave behind deck when someone says, hey, send me your deck. And then you've got the deck that you're talking through like I'm doing right now, which would be more like bullet points that I could speak to. But if you send
I remember there was an advert before from, I think it was Claudia Schiffer, and she would come on and she'd walk on the ad and her hair, and she just like do this, and her hair would just go straight back, and it would like, I just love beautiful looking hair. But here's the science bit. Right. And then afterwards, then it would be like, then the little things and the molecules, and they go through the hair and they made it hair and it keeps it bouncy and it keeps it shiny. But she understood. It probably wasn't Claudia. It's probably somebody, one of the other supermodels at the time. I'm going back 30 years on this advert. But like she understood don't bore your audience, right? You got to tell them what's in it for them straight away. Beautiful, gorgeous, shiny hair that just like bounces on its own. It doesn't even need your head to bounce. It's just like self-automated gorgeousness on a friggin' neck. And so the science, we want to understand that there's something there, but not at the beginning. It's just reinforcement. Remember, we buy with emotions, we reinforce with logic. You're just speaking to the croc brain right now. And
Right.
so there's no transparent market for hard money notes. Who cares? No transparency, performance capability. Who cares? No alignment between lender and buyer of notes. Who cares? Trading notes has been borrower dependent and illiquid. Who cares? Okay.
Right.
So you got to hit me with something. Tell me what is negatively happening in the market that is so bad that it is going to stop a thing which is beautiful from being beautiful.
Yeah. What's so bad is you got two different angles. You go at it from the investor angle that gets to buy into notes through our platform, or the hard money lender who gets to liquidate notes in a way that gets them exposure as advertising.
But who are you solving the problem for? And you can't say both.
We're solving.
You're only ever
I think.
solving the problem for one person.
I think it's easier to solve the problem for the hard money lenders because out of the 25 or so I've contacted, about half are interested.
Okay,
So
no, but so what? Okay, first of all, who pays you money?
the buyers, the investors are the ones who are
Okay,
paying.
so the buyers of the notes are paying you money. That's where your money's going to come from, right? And if that's where your money's going to come from, my guess is, remember, people buy on pain. They don't buy on pleasure. Nobody buys on pleasure. Everybody buys on
Hmm.
pain.
Hmm.
So tell me how the pain that they are having is negatively impacting them. What's happening? Are they losing money? Are they getting a worse return? Like what's happening before that's not going to happen in the future?
What are the best investments that you can make right now for the highest return on your money? Bitcoin is good, but it's volatile.
Yeah.
You can leave it in the bank and get 4 or
That's
5%.
okay. Tell me the best one. What's the best investment? Real estate, right?
Real estate's the best investment, and notes are even better than that because they're
Okay,
safe.
cool. And what's stopping notes? What is it presently that is stopping notes from reaching their company? You have to tell me, like, because what's not happening here is, and again, this is like for everybody watching this, this is everybody's deck. Everyone's, I do decks like this. When I'm doing a deck for Expert Dojo, I do them like this because I'm too close to the forest and the trees. People only are looking right now on this first slide. If you want to approach it like this, forget the term. I actually think the term problem and solution are causing the problem here. It's epic insight. What is the epic insight that you have? And I need you to quantify it for me. And let me give it to you in the context of venture fund, venture capital. I would say to people, you should invest in venture capital because previously, 15 years ago, there was only 13 unicorns in the world. Today, there is 1,200 unicorns in the world. And that would be all that is written on paper. It says, why would you not benefit from the increase in valuation from a zero to $100 billion? That would be my epic insight slide. Now, on top of that, I would say, look, you shouldn't need any more convincing, but I'm going to give you some just for shits and giggles. Previously, companies used to go public 20 years ago at a $50 million valuation. Coinbase went public at a $100 billion valuation. All of that equity is yours. You want more? I'll give you more. If you would put money into Airbnb, $100,000 at the very beginning, at their pre-seed or seed stage, that $100,000 would be worth $100 million today. Come on.
Hmm.
That's an epic insight. But I'm only hitting them with the very biggest one at the very beginning. And my biggest one is you are missing out on the greatest wealth generation opportunity of our time.
Yeah.
So you got to hit me in the face, Jack. You got to hit me with something that makes me stop. You have to stop me. Everybody has to stop an investor on slide 2. Like literally go, whoa, 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 whoa. Show me this again.
Yeah. and stealing from that first term of first couple words, you're as an investor out on the high yielding hard money lending returns that surpass any investment that you currently can make, because you can't access
Yes.
those
There you go. Now
investments.
what you're saying, every single citizen in America should be earning 12% on their money. Period.
Yeah, yeah.
Right? Like what the
Mm-hmm.
fuck? You're telling me every single year I'm losing 7% of my money. And most years, well, actually, no, every year I'm losing 7% of my money. Wow. So if I had like $1,000,000, like within only a very short period of time, like 10 years, 12 years, 13 years, literally, I handed away $1,000,000.
Yeah,
I would have my son do that. If those stats are correct, which is that 1 in 25. Okay, let's move to the next slide. Because I just,
yeah,
rather than fix the whole deck, I want to change your mindset to like
yeah. I
literally
like it.
you walk into a room and within 30 seconds, these people, these investors, and investors are everywhere, by the way. There's a misconception that investors are people that have the word investor in their LinkedIn profile. Most people who have the word investor in their LinkedIn profile are actually consultants waiting to charge you money. But that's where the honey is. The honey is putting the name investor in the title. Most funds are not looking at early stage companies, they're looking at late stage companies. And that means that actually the vast majority of the investors that I've seen come in for our early stage companies, people who know them, people who went to college with them, people who went to work with them, people who are like legitimately hardcore, really good people in the industry, people who had $5 million in the bank, but $50,000 is something that their wife or husband or kids or mom and dad said that they could fuck around with. Right? So every single person that you interact with, it's not about a deck in front of people that only have the name investor. It is about you getting in front of people and making sure that within the first 30 seconds, they understand the epic insight.
And this is regardless of whether it's a leave behind deck or an in-person deck.
Me personally, I understand the need for decks, so I'm not saying don't use a deck. I haven't done a deck in a presentation in 15 years. I personally hate decks. So I know I'm giving advice on decks. You got a hater of decks giving advice on decks. So take that within the context that you want to. I think decks are like the greatest curse to creativity that's ever existed in the world. Like this here, this communication that we're having right now, this is what it's all about.
So when someone says, yes, send me some information, send me your deck.
Send them a deck. Send them a deck. But what I just want to do is take your reliance away from the deck. I don't want the deck to be your master. I want you to be the master. And I want your deck to be subservient. Right?
Got it.
So it's totally okay to leave information. There's no problem there. But the moment you start going through a deck, you've just bored somebody with the same thing. That if it's an actual investor, they've been doing it for a long time. They've seen like 20 decks so far that day. It's grueling, I tell you. And like we receive, hundreds and hundreds and hundreds of decks every single month. The best deck I ever got was from a company who did a video. And the video was so awesome. And the video is like, hey, Brian, I want to tell you a little bit about our company. And you're going to like our company so much that I even had a tattoo with your name on it. And it was cool. And then she had a tattoo in her arm with the name Brian. I'm like, oh, I shouldn't be so impressed with this, but I am. And then she goes, and it's not just the tattoo, it's the little things you notice. And then she's walking past a wall, and then the name Expert Dojo is on the wall. I'm like, oh, this is good. And then she said, yeah, we believe in detailing content toward the consumer in a way that they really feel. And this has been so powerful that our revenue has grown by 300% over the last year or so. Now we're at like $400,000 a month in revenue. And truth is, we're not really looking for investment because we're already oversubscribed. But we might take your phone call. And it was just this. It was like a 1.5 minute. And she's like, you're going to like this video so much. You've probably shown it to your friends already. Or you've probably looked at it 4 or 5 times. And I had. And then she's like, maybe you've even shown it to your friends. Maybe you're doing it right now. And I'm like, oh, I hate you.
Wow.
But I reached out to them immediately afterwards to say, look, you guys are outside our thesis. You're later than I normally go for, but I love, 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 love you. First time I've ever done it. And so, like, my biggest lesson for today to everyone is, don't make your deck your master. Have the deck as something where you can leave information about what you do and how it works so that they can show it to other people. Your job in an interaction with somebody is to make sure that that person sees that epic insight and they understand that it's not necessarily that that real estate is going to be like the greatest wealth generator of our time, but it is going to be the safest for the return that you get, like, period. And you should go after Bitcoin. Knock yourself out. Go after Bitcoin, but don't risk a lot of money on Bitcoin because we don't know what's going to happen there, right? You should go after stocks and shares on the markets, sure, but you don't really understand that and you don't navigate that path. So don't put all your money into that. Put 50% of your money in real estate. It hasn't dropped in 100 years, right?
Something
And
like
so
that.
if I can get 12% on a safe investment, I'm going to take 12% in a safe investment. Okay. And then the solution, you can see it's the same principle, Jack.
Yeah.
No different, right?
Yeah.
Revolutionizes note buying through preferred. Next one here, again, same thing again. Next slide, a little bit boring as well. And so I don't mind any of this because it's all product attributes. You're trying to romance me.
Yeah.
Right? Romance me with how I'm going to get more money. I'm giving you $50,000 or $100,000 or $500,000. Where in here are you telling me what happens to my money? Because that's all I care about. And next slide, the same, right? So, like, a couple of comments on it. And it's not really the aesthetics. I very seldom have a view on the aesthetics, except for that video because I love that video. But what you'll see in here is you're really making it very, very hard for the words that you have on screen to compete with the emotion of what you're telling people. It's also not speaking my language; it's speaking your language. My language is money. My language is my 50. I love my $50,000. I almost feel like stacking it on top of each other in little $1 bills just so I can hug it and I can look at it. Really, is so lovely, right? And I'm
Yeah.
giving it to you. And just because I'm giving it to you in a wire transfer, I'm giving it to you in a check, like, that doesn't make it any easier to give it up. I don't want to give it up. I love that money. I could do so many things with it. I could go to the cinema with it. I could hang out with my boy. I could go to Palm Springs, and rather than pay for the cheap grounds tickets for $30 a piece, hell, he may go to his first stadium ever. But you're not going to let me do that because you're going to take my money. So what are you going to do with my money? Are you going to give me more back so I can take my boy to, like, the US Open and I can take him to Wimbledon? Is that what you're going to do? Because you got to show me that. I just keep going through the slides just to get a feel for them.
Yeah.
Because and by the way, I swear what you have here is a very functional deck. This is not a terrible deck at all. This is just very much about product attributes. And so I'll top and tail this with one thing that will hopefully make it, like, much easier for you to work on this, right? Just go to your last slide as well, if you can. Just bring it down. Click through the slides. Yeah, there you go.
Oh, okay.
Yeah, just click through them very quick. Boom. Yeah, next slide. We'll just give it like 2 seconds on each slide. I won't say anything. Next slide. Yeah, next slide. Stop there for 1 second. It's a good it's a good team. It is a good team. You just want to maybe make it a bit nicer. Maybe throw a picture in there or something, or something, but also show, like, how epically good the team is. Okay?
And
Just keep going through the slides.
when you say show off how epically, this shows off how epically good the team is, or
It kind of does. Again, it's still very wordy and it's very hard to go through it. People won't go through it. It's I can tell by going into it, by working hard on it, that you're pretty cool. But you're making it hard for me.
okay.
When there's so many words on everything, it just makes it really hard. But I can still get it. Like, it's not like you have good things there, like 25 years in real estate. That's awesome. I would like you to tell me how much money you've made for people. I would like you to tell me what those 20 years in off market real estate. This actually is a very good example of like speaking a different language, because what you're telling me
Mhm.
is why your resume is so awesome and why I should be impressed. What I want to hear is you made money for people,
Mhm.
even if it's for you.
Mhm.
Like, my partner has made hundreds and hundreds of millions of dollars, literally hundreds of millions of dollars from real estate. He got me. He
Mhm.
could tell me to go and like build a city like Mexico City on top of a lake just because there's a serpent in a was it a hawk? But there's a serpent inside, like in the claws of a hawk, and I would go and do it because he's made money for himself and for other people before. Okay, so change the language to the investor's language, and then just go down a little bit more. Blah 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 blah. Keep going. Is that the last one? No. Keep going. Blah 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 blah. Keep going. Is that the end? And
I'm still
the end.
dragging it out here.
Okay, cool. And fine. And so 2024 launched the marketplace reach. So your last slide, by the way, should be a reinforcement. If your first slide is reinforcing like what you're going to do with my money, the last slide should be if the first slide is telling me what you're going to do with my money, the last slide should be reinforcing me how safe my money is.
Okay.
You should have my money in like a little crib, just rocking itself gently to sleep, very happy, very safe, getting ready for the evening that's coming. And so if you look at this, like maybe 1% of it is focused on my investors' money. 99% is on the creative endeavor that you're going ahead with. If you want to really build with investors, and because also you're pre-seed and you're early, you also want to show a little bit of safety in there. So you want to be able to show people, hey, this is what I'm going to do at the beginning. There might even be steps. You know what I was saying about like slide 2 being the steps of how you grow this? I don't see what's happening with my $600,000. Like, I just see that there's legal and compliance review. That seems like a lot. Technology build out. That seems like a lot. 5 startup employees. That seems like very little. Marketing. That seems like very little. And so my my thought as an investor at the beginning would be the likelihood of this making it is small, because a lot of money
Yeah.
has to be spent before you can actually get this thing out to market,
Hmm. Yeah, that's the tricky part
right?
about
So you
this.
need to improve that trust base.
This number is not just pulled out of the air. This is an actual 6 different attorney firms, including Wilson Sonsini and Romano Law and a couple of others. Cooley, a person referred by Cooley, has given 150 to 500 is what we're going to need because we're brushing up against
Listen,
SEC.
Wilson Sonsini charged $200,000 an hour. So I wouldn't mind what Wilson Sonsini tell you. You need a partner in real estate on your team. I'm sorry, you need a partner, a legal partner on your
Yeah,
team.
yeah.
That's all. Legal partner on your team. Don't worry about the big expensive attorney firms that love charging fees. And I'm going to come back in the future as an attorney. I swear to God, I think that these people are like the magicians. They're like the David Copperfield of our time, because they can magic the most enormous fees for nothing. And so just
Mhm.
like bring in a legal person, but more importantly, look, the people that you're speaking to. So here's where we'll leave it. Okay. Number one, the investors you should be going after are real estate investors, right? Because you're building their pool of fellow investors and you're bringing them in. Number two, you have to speak to something that they would understand. If I was a real estate investor, or if I was a real estate developer, I know that the biggest challenge I have is finding people who will invest in my real estate projects, right? And what I see you doing, Jack, is you're increasing that pool of people for me.
Increasing the pool of people who will
In some
invest in your real estate project.
will invest in some real estate projects?
Um, well, not exactly, because there's a hard money lender that is doing the investing, doing the lending. They're the
I
yeah.
understand. I understand, but I believe personally your platform will evolve in the future in the same way that Robinhood evolved from being fantasy stock trading to something else. But look, with you, you need to speak to the people who are the people who understand the space more. There's hundreds of thousands, millions of real estate investors, developers, people in the space. Number two, change the entire deck to show that you're taking care of their money and how you're taking care of their money. Number three, speak to problems that they really understand and that they see, and speak to a market size of being able to bring in all of these people in from the outside into the deck. And then finally, don't try and do the deck yourself. Bring in a couple of people in the real estate space who have nothing to do with your project and let them help you brainstorm what this should look like.
Okay.
You're very deep in this, which means you're not going to be able to move away. You'll take this away, what we went through today, and then you'll iterate it and change it, and it will be 70% different. You need to start it from a different place.
Mm-hmm. Okay. Okay. Great.
That's it,
Hey,
buddy. I know part of you is thinking, hey, thanks, Brian. You've really helped me. And part of you is thinking, screw you,
no,
Brian.
no, 100% is thinking you've helped me. I'm not. I'm going to adjust for sure.
You need to raise the money. It's all about raising the money. Look, if I want to, let me finish it like this. Look, we have not really looked for money in Expert Dojo from institutional investors. But I did go out to crowdfunding because I believe deeply in crowdfunding. I believe in the crowd. I believe in decentralization. I believe in like all these wonderful things. And so we went out about 2 or 3 years ago to the crowd and we said, look, we're going to raise a little bit of money internally for the mothership. And that way, if Expert Dojo sell in the future, then you guys can all benefit from it. And we brought in like 1,000 people. It was a wonderful experience. It was really good. But when I spoke to those people, I spoke to them not talking about Expert Dojo, like saving the world, not initially. I spoke to them to talk about early stage startup and how it's a highly complicated area that normal people can't work out themselves because there's a lot of collusion, there's a lot of collaboration, and there's a lot of insider knowledge on what companies are going to break through and how those companies can break through. So I spoke about our expertise and how we had already brought in an IRR of 50+% on the companies we brought through. Like we're in the top 1 or 2% in the United States in funds. I spoke to them about how a market was growing to the size that it was going to become the greatest wealth generator of our time. I truly believe this long term, greatest wealth generator of our time. People who will invest in early stage companies will become what was the real estate people before, what was the oil and banking and insurance people before that. I believe it is going to be the technology people or the early stage startup people of today. And then in the future, I think, the Bitcoin folks and stuff will sprinkle in and out as we go through. But you have to talk about that.
Mm-hmm.
And it's like I meet somebody at a dinner party. Not that I go to dinner parties, but if I did, like I meet them at a dinner party and they're like, hey, Brian, what are you doing? I'm like, it's not so much what I do. It's like the privilege that I have. I get to invest in an area which is singularly the greatest wealth generation sector of our time. It's early stage founders. And there are thousands and thousands of these companies that become multi-billion-dollar companies. And I get to go searching for them like an Indiana Jones in the Temple of Doom when these guys are like $3, $4, $5 million in valuation. And then when they jump by 100 times, I want to be the one to benefit. Where's the deck in there? There's no deck there.
Mm-hmm.
People are like, cool, Brian. How do I take part in that? That sounds good. Well, you don't want to jump in straight away. It's too hard. Tens of thousands of startups. There's only one Indiana Jones, right? But I'll tell you what, outside this environment, you want to sit down, you want to have a chat and go through it. I'll give you a free education on how you can learn about it because I don't want you looking like a schmuck when you go in and start investing here. And so what am I doing?
Maybe you want to meet with you.
I am using, first of all, I am asking for permission for more than 5 or 10 seconds because I know my wife's not going to be happy if I like go into some like blah, 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 blah verbal pitch point presentation. Right?
Yep.
That's it. That's it, my friend.
Magnificent.
That's all I
Thank
got
you
for you.
so much.
Okay. No, you got it, my friend. Listen, go out there, make it be, and then just practice it with investors. Practice that 30 seconds and making sure that you just blow their minds with the fact that you're taking their $50,000 and you're turning it into Y. Whatever, if X is $50,000, what does Y look like? And then how do you make sure that their lives are measurably improved as well as other people?
Fantastic.
All right,
Thank
my friend.
you.
I'll see you back here next Monday. Everybody else for joining, thank you. I hope this stuff is helpful. Remember, none of this stuff is prescriptive, it's descriptive. So you take all of the content that you have in here, you allow it for like what is best for your investors, what is best for your market, what is best for your messaging, and you take it in the overall context of most decks are horribly boring and focus on product attributes. You want to move it away from that and speak in the language of the investors, which is what are you going to do with my $50,000 or $500,000 or $5 million when compared to the bank, when compared to gold, when compared to another early stage company in cybersecurity, when compared to a stock market, when compared to a later stage Series B company. How is your return going to be better for me? Okay. Thank you, everybody. Thank you, Jack. Until we meet again.
Thank you. Thanks a lot, Brian.
You got it, buddy.